Eric Mwadid, Mwadid.com, with US market analysis for the weekend of September 19th and September 20th, 2015. Let's take a look at how markets closed on Friday. We see that pretty much a down day, about 1.7 down on the Dow, 1.3 on the Nasdaq, 1.6 on the S&P 500. Gold was up about 2%. Crude oil was down 4%, and we see that VIX was up about 5% for the week. We see that the S&P 500 was down slightly, down 0.15 for the week. The Dow was down 0.29%, slightly down. And we see that for the week, the Nasdaq did manage to close unchanged or slightly positive, up 0.15%. We begin by taking a look at the Nasdaq weekly. For the week, we can see we've given back pretty much all the gains for the week, which is not a good sign of what the market intends to do here. Also, we see that we are seemingly now confirming resistance at a sharply declining 10-week moving average, which is not a good sign. Keep in mind, on the way up, the market was using and cushioning itself against the 10-week moving average during these nice bullish phases. But now we are looking at an type of a different market here, because the 10-week moving average seems to be being used as resistance. Keep in mind, we've been talking about this bearish crossover here between the 13-week moving average and the 34-week moving average. So that's a bearish crossover. And also there was some type of a, thinking that if the market can hold on the line where it has been finding support on the weekly RSI. So we're thinking if the market can hold this line here, where it has been successfully bouncing over the last couple of years. All these lows have come with support on the weekly RSI on this line. So if the market was to do the same thing, then it needed to hold. So depending on what happens here, if this is still going to be support, then there could be a chance that the market recovers. But if we start using this line here for resistance, then that's going to be a different type of a market, where instead of finding support, you are now seeing resistance, which could be a problem, indicating the possibility of even lower prices. And so what we see on the Nasdaq is that a couple of observations: resistance at a sharply declining 50-day moving average at the highs of Thursday, highs for the week. We also see that we've been unable to close above the 200-day moving average, which has become resistance. There's also, after closing here, we had broken below that line. So we broke here for this sharp drop, and since then we've been unable to move above that break level. So lots of bearish things. Like I was saying, on the RSI for the daily on the Nasdaq, you can see that recently we've been rejected at the 50 level here, which is right there, and also rejection at the 50 level here over the last 2-3 days, which gives us short-term highs and the possibility maybe of even lower prices. So until the market can recapture the 50 level, this looks to be a different type of market that is more than likely looking to probe lower prices. Take a look at the Dow, and you can see here on the Dow daily, there's a line connecting the highs on the Dow, very simple line like that. It connects the highs of last year on the RSI, or late last year, highs of May, highs of July, and the current market there, which might explain why the market is stalling right now. And you can see that we are also showing resistance at the 50 level on the daily RSI, which is also another indication of a market that actually is not very strong. So if you want to simplify this, until such a time that the market can move above this declining RSI top line, this market is in trouble. So it needs, if you'd like to see the market move higher, obviously the first order of business is to move above that very clearly defined line of resistance. Take a look at the Dow hourly. Coming off the highs here, you can see that there was a break over trend line on the RSI right here, and so we can use that information down the road, and we can see that at the highs of the week, and the market was trying to move higher, it came back and hit that level and failed to hold above it. So this break back below this level here was a sell signal sometime on Thursday, Since then, we've seen the market lose a lot of ground. Is it poised to go lower? I guess it depends on a couple of things. If the market can A, break this trend line here, we haven't broken that trend line, that could hold, but if it breaks, one can expect lower prices. We take a look at the 30-minute chart for the Dow next, and on this chart there's a slight reasoning that here the market could stabilize, and I'll explain that. You can see off the lows here the market has made higher highs, so that's not a bad low here. So this was a nice low. Market's been improving over time, incremental improvements, and so we can see that the RSI did break out on the 30-minute chart. So this is 30 minutes short term, that this is where this movement came off the lows here. We can draw a line from there, and right now we can see that if the market can hold. So let's draw a line from there, and you can see that the lows that touched that RSI level there, the market held. We touched that RSI level there, the market held, and as of Friday's close, if this continues holding, that would suggest that the market could actually even start building higher. So depending on whether this is going to be support or break, if it is support, I would say somewhere around here the market could start building higher. Otherwise, we'll see how that goes. If for some reason we end up breaking that trend line or this green line, if we break that green line, then maybe we see lower prices. But by the way we seem to be closing on Friday here, seems like this line is holding. So if you're a bull and you'd like the market to hold, this is looking like fast short-term signal where the market seemed to be holding some level of support based on recent support. And again, this is the 30-minute chart, and this could be giving bulls some lifeline. Take a look at the Dow Transports, and we take the highs here on the daily price. We can see that the market did come and make contact with that line this week at the highs. We can also see that just like the Dow, if you take the RSI highs, the market connected nicely with the top of this week's highs. So resistance there made a lot of sense. We also seem to be cracking below 50 on Friday, which might explain the big point drop in terms of the Dow Transport. So until the market can move above this line of resistance on the daily RSI, I think one can speculate that there's higher chances of lower prices, and it's only when the market finally moves above that line that maybe the market can start building and recording higher prices. For now, the risk is lower just because the market has been unable to move above some of these clearly defined resistance lines on the daily RSI. Take a look at the S&P 500. We also see that at the highs of the week, we touched the 10-week moving average, gave back all the gains for the week, which is not good. If we take a look at the S&P 500, we seem to have found resistance at the 50 level. Also, keep in mind that this resistance was also seen here middle of August, which was these highs, and once we saw that resistance at the 50, we saw this market drop significantly towards the end of August, which was during this period here. Again, for you to truly understand this concept, I encourage you to check out the video that was recorded this Friday going into how the 50 level support on the markets and charts can help you determine which way the market wants to go. So check out this video, which goes into detail about the current market situation and environment and how they're responding to that 50 level. Okay. Let's take a look at Apple, and we can see that for the week gave back all the gains. And I think here we can also conclude that as long as it is trading below the 10-week moving average, it should not be strong. So anything below the 10-week moving average is not a good sign. Why? Because if you simplify this, on the way up, the 10-week moving average tends to be support. And so conversely, on the way down, the 10-week moving average becomes resistance. So right now we are looking at resistance at the 10-week moving average, which is generally not good for your markets. If you take a look at the Dow or at Apple from a daily chart, take the highs, draw a simple straight line, the simplest straight line you can think of, connecting the highs, and you can see that at the highs of this week it hit that level and is showing resistance. It is also corresponding with resistance at the declining 50-day moving average, which is bearish. And also we can see that it is now weaving itself above the 50 level on the daily RSI and back below it. Just like we saw here, that was a bearish signal, which was off the highs here. And that makes a lot of sense because uniform activity above zero, back below it. And that was a sell signal here, which was off the highs, and another instant of uniform activity above 50 level and back below it, which is another short-term sell signal. But again, the simplest way to put this is the only way this stock does well is if it can clear this clearly defined line of resistance. Anything below that is bearish. If it can move above that line, then that would be bullish. That's one view. The other view is based on the break line. So it broke below this level here. You draw a line from there, and that line should tell you when to sell if it gives you uniform action. And we see uniform action above the red line, back below it for a sell signal. Uniform resistance at the red line for another sell signal short term. So lots of things here, generally speaking, pointing to markets that are still struggling. In conclusion, take a look at the monthly charts for the Nasdaq, and we can see here as of right now we are still playing around with the lows here. The risk is if the Nasdaq moves to 3-year lows. So 3-year lows, a move to 3-year lows on the RSI and the MACD is a major sell signal. We know that. If it breaks below that, that's not good. We see that the MACD is already trading at fresh 3-year lows, or at least close to it on the Nasdaq, and also a chance of moving below zero for the first time in many years. So the risk continues to be that there could be a break of these trend lines here, of these lines, and especially more so if the RSI moves to 3-year lows. That's going to be a major sell signal. We see that the Dow already broke down to 3-year lows on the RSI, on the MACD, and so really this is markets that are prone to make lower prices just because of this major sell signal that we see with the breaks of the RSIs on the MACDs on the monthly. So this breaks here, not good. Moving below zero on the MACD here is not a good sign. So lots of reasons to be very cautious and continue to be cautious. S&P 500, you can see already moved to fresh 3-year lows, very bearish. And the risk is that should it move below 50 on the monthly RSI, on the month it moves below 50, it's going to be a big drop. So be aware there could be another major drop on a month-to-month basis. S&P 500 has already seen one of the MACDs already trading at fresh 3-year lows, which by itself is a bearish signal. So below zero is bearish on the MACD, but the key is if it can find support and move higher, hold and stem this drop. Otherwise, if it cracks below 50 here, expect a big down month. Let me repeat that, expect a huge down month when it moves below RSI 50. Eric Muathe with Muathe.com. Enjoy your weekend. Be on the lookout for part 2. And for this video to make sense, right now I encourage you to check out my video on YouTube right here. This one was recorded on Friday. This would explain what the markets are doing right now. Otherwise, be on the lookout for part 2 of this weekend's market analysis video. If you want to see some of the stock picks or ETF ideas I might have after my research over the weekend. Eric Muathe, Muathe.com. Be on the lookout for part 2 of this week's US market analysis. I am out. Peace and blessings. EACS. I am.